Wolf Theiss Soundshot, taking a close look at legal topics in Central, Eastern, and Southeastern Europe.
Welcome to the first episode of the Wolf Theiss Soundshot. In this episode, corporate and M&A partners Sarah Waret and Florian Kusznier from our Vienna office will discuss the changes in deal structures they have seen in the first half of 2020, how COVID-19 and the subsequent slowing down of numerous economic sectors have affected M&A transactions, and their expectations for future deals in Austria, Central, Eastern, and Southeastern Europe. Both Sarah and Florian have several years' experience leading teams in cross-border transactions. In her work, Sarah focuses on private equity, infrastructure, and financial institutions, while Florian has experience working in public takeovers, as well as technology, healthcare, and life sciences.
M&A has experienced major shifts as a result of the global crisis due to uncertainty of new waves, restrictions, and operational disruptions. For example, corporate leaders put M&A transactions on hold to focus on shoring up their operations, in particular at the beginning of the crisis. However, I see several opportunities in deal making as a result of the crisis. Furthermore, we all learned our lessons and identified inefficiencies from deal making processes before the crisis. And it is interesting to see how effective deal making will be defined and conducted in the future as the world still continues to shift towards virtual meetings and remote working. So Florian, what's your view on the new M&A ecosystem and what are your takeaways post-COVID?
I think it was quite an exciting period, to be honest, with a number of interesting changes that we saw in deal making. I think my first takeaway was that because of the uncertainty of the whole crisis, we saw a number of clients really putting a brake on all of their M&A activity, basically, unless a deal was already between signing and closing, or at least well underway, because they were so unsure what COVID would mean for them, and also in particular in terms of valuation and commercial impacts on a transaction. Another aspect that I found really interesting was at the same time how quickly the various parties and players in the market adapted to the sort of changed reality, be it, buyers being able to shift or expand the focus of diligence, or be it W&I insurance providers who immediately started to rework their products in terms of added diligence requirements or COVID exclusions in their policies. So for me, two of the main lessons learned, if you want to call it that way, is really that material changes in the market will have an impact immediately on how parties behave and what they do. And this may well be positive or negative. And at the same time, and I think that's sort of really the good news from where we are coming from, is that market players remain nimble and very adaptive and aim to keep their focus on their substance goals, so to speak. And so for us as external advisors, I think it pays off to think outside of the box and really be reliable partners to a client in times of uncertainty, and assist them in the way forward whenever the going gets rough, so to speak.
I fully agree with you. The COVID crisis showed us that relevant parties are very adaptive, and also showed us the importance, I would say, of digitalization and automation, not only of M&A processes. Actually, we saw a decade-long boom in M&A activity in several parts of the world before the COVID outbreak. And then came COVID, and the Austrian economy was hit by the pandemic in line with many other jurisdictions, and have suffered from the crisis both in terms of deals and volume. So while corporate M&A deals were looking strong at the beginning of 2020 with positive growth indicators, I think that M&A activity will be globally down somewhere probably between 30 to 50% when compared to 2019. And I would say that one lesson learned due to the crisis is that effective deal making will be conducted in the future differently, as the world will continue to shift to virtual meetings and remote working. That means that at the same time that virtual M&A and remote working are set to further increase to a certain extent. And I think that many parts of the future M&A process will continue to evolve and become more digitally mature, in particular based on the lessons and inefficiencies identified due to the COVID crisis.
I think it's an interesting point that you're making here, because if you come to think of it, that in the past we've very often experienced, little things like how difficult it can be to arrange for a meeting or to get everybody to one place, and indeed I think we've all learned sort of a bit the hard way, if you want to put it like that it's not that difficult after all to set up a video call, and that there are a number of things that you can actually make a lot of progress on, even if you're not physically in the same room. Although personally I still think that working remotely only is a bit of a challenge for a situation like an M&A transaction. I don't know how you feel about that personally, also from the experience that you've made in that.
Well, I would say it depends on the transaction. Yeah, I think that for me, at some point, it's certain parts of an M&A transaction you can do it virtually and on a digital way, but and I will come to that later. When it comes to certain aspects like negotiations, I think it's very important to basically have physical presence. However, I would say that generally such digital evolution and technological sophistication can be expected probably in about 3 to 5 years, because I would say that a lot of companies are still not there. So I would say new technologies will likely support to accelerate the time to conduct due diligence, for example, and whereby such new technologies will in particular I would say enhance data management and communications. And generally, I would say digital technologies will enrich the entire M&A process and make it quicker and hopefully more secure. But at the same time, this does not mean that deal makers will be replaced by digital technology, as some may fear, but rather deal makers will be supported and empowered by such technologies. As briefly mentioned, there are several areas in the M&A process which of course cannot be entirely automated and require human intelligence, experience, and expertise. These areas, for example, and as briefly outlined, are from my perspective, strategy, negotiation, and deal structuring, which from my perspective cannot or not entirely be automated and replaced by new technologies. But however, at the same time, there are challenges connected with the implementation of digital processes. According to an analysis of data side, financial and investment constraints on the one side and issues around data security and privacy on the other side are the main barriers to integrate M&A process related digital technologies. So to sum it up, M&A deals will always remain a relationship business and people business. However, I think digital technologies will be increasingly the driver of deal making throughout the M&A life cycle. These technologies are more than ever, I would say, needed due to the crisis, and people are more and more working remotely. So besides the fact that digitalization and automation of M&A processes are getting more and more important, I expect that specific areas and players will benefit more as a result of the crisis. I think we will see several future opportunities arising.
Absolutely. I think on the one hand, digitalization and technology that you mentioned sort of as one important driver for, let's say, streamlining or enhancing the transaction process is going to by itself an important area where we're going to see a lot of M&A activity, I think, so driving deals, making it interesting for parties to pursue a transaction. Another one, and we've seen that as a firm advising Merck on the Thermis acquisition at the beginning of this year, is the area of transactions directly resulting from or directly related to the COVID crisis. For instance, when it comes to a target company that is developing vaccine, for instance. So there's a sort of a prime niche in the healthcare sector, I would call it at the moment, which is extremely attractive for potential M&A activity. And then another area that I personally think will see some activity is transactions related to supply chains. I think that the crisis as it developed globally has seen a number of companies facing difficulties with their supply chain management, or they have realized that they all of a sudden didn't have access to key components or key technology. And of course, you can say, it was a lockdown situation, so they probably weren't operating at that time, but they would still, I think, be very much concerned how to prepare for reopening their businesses. And I could well imagine that there might be situations where companies might prefer to sort of insource certain parts, certain key partners into their own organization. And I think there will also be situations where this has been, you mentioned it at the beginning, I mean, this is sort of almost without precedent in terms of economic impact that we're seeing. So I think there will be situations where companies are forced to sell off non-core assets to generate liquidity or to support the remainder of their business operations. And private equity, I think, are just waiting for this to happen. So overall, I think there's a lot of opportunity in the market right now and coming up in the next few months. And if you look at sort of underlying data, recent materials compiled by Bloomberg, for instance, show that Europe is currently much higher on the radar for M&A deals than the US are, and simply because the US are still having quite of a hard time to cope with the crisis. So the general message, I would say, is quite positive for the period to come.
Yeah, and I have a similar view on the current opportunities as you have. And in addition to that, what you have mentioned, I would say that generally, and this is the first, I would say the current environment favors those players who mainly take a long-term view on the Austrian markets and also in the CE region, and favors those players who can afford to take short-term risks. I personally expect more M&A transactions which are based on strategic considerations rather than such M&A transactions which are based on short-term growth. And secondly, the current environment, I would say, favors also such players who are not dependent on third-party financing, either because they have sufficient cash reserves, enough liquidity, or they structure or implement the transaction in a way where they don't lose much liquidity. So respectively, we may see an increase in corporate mergers and share-for-share transactions, I would say, without or probably partly with cash elements. And I also think that it's not surprising, as you mentioned, life sciences and healthcare and also in particular technology will remain as strong markets for investors, buyers. And therefore, I also would say that the market will remain seller-friendly to this extent in the mentioned sectors, as the targets are still rare in those sectors. Lastly, I would say that companies focusing on sustainability, in particular on environmental issues, targets such as renewable energy will further remain attractive for investors in Austria as well as in the CE region. And this confirms that the long-term approach generally defines success in the current situation.
Do you also think that, it's still a crisis situation? And you've mentioned, I think totally correctly, that a lot will depend on how financing can be obtained for buyers and how sort of well prepared they are to go into a transaction. Do you think that there will also be more difficult situations on the horizon?
I would say that it's not impossible to have third-party financings. I think it's still possible to have it, but I think that those parties who are not dependent on third-party financing will have more opportunities, and these will be easier to implement rather than being dependent on third-party financings. Yeah.
Makes sense to me. I agree.
And I would say I would further see opportunities arising from a surge also in restructurings and distressed M&A.
That's a good point. Absolutely.
Yeah. But I think such increase in restructuring and distressed M&A will probably arise in particular due to the lapse of deferred payments, taxes, and other governmental supports granted due to the crisis, and additionally the duty to file, for example, insolvency resulting from an over-indebtedness is no longer suspended in Austria. It was suspended until end of June, so this may result in a further increase of distressed M&A and special situations. But despite these challenges, there are also in special situations opportunities for buyers as well as for sellers, which in particular means that crisis-proof investors with cash reserves and a lot of liquidity are eager to purchase distressed targets at favorable valuations. On the other hand, as you also briefly mentioned in the beginning, the sale of non-core business reduces costs and increases liquidity, which makes probably certain situations attractive for sellers. When dealing with such special situations, I would say careful structuring of the transaction on the one side and managing time constraints and several stakeholder interests on the other sides are important success factors, I would say, not only from an advisor's perspective. So in these stress scenarios, I would say in general, time is always short. The more prepared the buyer is, the faster it can act and secure successful deals. And another crisis-related expectation is that buyers will probably more and more consider takeovers of publicly listed companies due to the crisis, and such buyers may need to effectively navigate the regulatory requirements to take full advantage of their options. And Florian, it would be interesting to know your view on this.
I agree with you. I think if you look at Germany, for instance, I mean the Austrian sort of takeover environment is probably not the most active, but if you look at Germany, for instance, there have been a number of situations, not distressed situations, but a number of situations where even private equity funds started to take stakes in listed companies or even take over listed companies. There was the Osram situation before AMS was successful. The frontrunner was a PE consortium of Bain and Carlyle, and about a year before that, it was actually a consortium of Bain and Cinven who successfully took over the pharmaceutical firm Stada. And Austria has seen quite a bit of takeover activity, in particular in the real estate sector over the last few years, and this has been a very active industry. And if you look at the stock market, there are still two sizable players, Immofinanz and CR Immo. So one obviously wonders what's going to happen there, and I think that you might still see some takeover activity there. And the Austrian takeover regulation has an interesting feature in a particular type of offer, which it calls the voluntary offer, which is not aimed at control, but rather at acquiring a sizable stake but below the control threshold. And the advantage is that this particular type of offer is not subject to the statutory minimum price rules. So you are more flexible as a bidder in the consideration that you would like to offer. But at the same time, if you look at the sort of free float shareholder presence in annual general meetings, this can still be a tool to get you quite an interesting size of a stake in a target company, and allow you to take a relatively strong position. So personally, I think there's probably a bit of more of a niche market, but there is still conceivable scenarios to see takeover activity as a follow-up to the COVID crisis, if you want to put it like that.
Thank you for joining us for this episode of the Wolf Theiss Soundshot. For more information, you can contact us on our website www.wolftheiss.com and via email under soundshot@wolftheiss.com. Or you can follow us here to keep taking a close look at legal topics in Central, Eastern and Southeastern Europe.